Hi, hello, welcome to this SAP SD tutorial. In this video, the sales and distribution process will be explained using a real-world chocolate business. You will see how the sales process is handled in SAP from the moment the chocolates are requested by a customer until the payment is made. To begin with, we'll see what exactly is SAP SD, SAP Sales and Distribution. It's a key logistic module in SAP ERP, which is used to manage the entire sales cycle, beginning from the sales inquiry to delivery, billing, and finally the customer payment. We can also say that SAP SD is like a smart digital system that helps the companies to manage their end-to-end sales. Now let's look at a real-time example. Here, the SweetTreats Ltd is a chocolate company. Local store called TastyMart places an order for 100 boxes of chocolates. We'll see how each step of this process is managed by SAP SD. First comes the pre-sales and the order placement. Imagine a chocolate shop and the customer placing an order. A shop owner of TastyMart wants to buy chocolates from SweetTreats Ltd. Here is how the process works step by step. The first step of the pre-sales process is the inquiry. It's just a customer request. The TastyMart calls or emails Sweet Treats Limited asking, "Do you have 100 boxes of chocolates in the stock? What's the price and what's the delivery time?" So once the inquiry is placed, we'll see what happens at the SAP. The sales team at SweetTreats Limited creates an inquiry document in SAP using the transaction VA11. This inquiry document captures the customer details, that is, who is inquiring for the chocolate boxes, the material details, which is nothing but what kind of chocolates they want and how many boxes they require, and the requested delivery date, and finally the sales area. The important thing to note about the inquiry document is that no prices or availability are confirmed yet, and this is just a request like asking a question and not placing an order. So based on the inquiry, the Sweet Treats Limited checks internally if the stock is available and can they meet the requested delivery date, and if there are any applicable discounts for the chocolate boxes which they can provide to the customer. So once all these criteria are satisfied, there comes the next document, which is the quotation document, which is created in SAP using the transaction VA21. So the quotation document includes the material price, say suppose like it's 50 rupees per chocolate boxes, and how many quantities required, which is the total quantity of the boxes, that is 100 boxes. It includes the validity. Say suppose this offer is valid for 7 days, and the delivery terms, that is when and how the goods will be shipped, the payment terms, which is nothing but the any advance payment by the customer, and this quotation document is a binding offer. If the customer accepts it within 7 days, the Sweet Treats must honor the prices and terms. Before proceeding, the SAP ensures all the customer details are available and accurate, which includes the name, address, and the contact information of the customer, the billing and the shipping address, the payment terms, the credit limits, and if the customer is new, they are first created in SAP and they maintain the customer master data in SAP, and then next happens is the material master check. In the material master check, the SAP checks the chocolate products, like what type of chocolate they require, what is the packaging size, if that particular chocolates are available currently, and any batch or shelf life restrictions. All these details are checked at the background. So this ensures that SweetTreats Limited can actually fulfill the order if confirmed. So the next will be the pricing. Using SAP's pricing procedure, the system calculates the base price of the chocolate box and the discount which can be applied, and if there are any freight or delivery charges, the taxes, and all of these prices are calculated automatically based on the condition records maintained in SAP SD. So what happens next? So the TastyMart reviews the quotation and says, yes, we confirm the order. Once the TastyMart confirms the quotation, now the Sweet Treats Limited creates a sales order using the transaction VA01 in SAP. The order includes the customer and the shipping information, the confirmed product quantities, the final price and taxes for the chocolate boxes, and the delivery schedule. So this marks the official start of the sales process. The stock will now be reserved and the order will flow into delivery, picking, packing, and finally the billing stages. In short, from simple request to a confirmed sale, SAP makes sure everything is tracked, priced, and ready to fulfill. Once the order is created, the next step comes the availability check. Availability check is nothing but a check which is carried out to ensure that the requested products, the requested chocolate boxes, are available in stock or can be procured in time to meet the customer's delivery requirements. Now we'll see how this availability check works. At the background, SAP checks if the requested quantity is available, if the requested quantity of chocolate boxes are available, and it looks across the storage locations and plans to confirm if and when the 100 boxes can be delivered. TastyMart gets a realistic delivery promise, and the Sweet Treats Limited avoids overcommitting. To summarize, the TastyMart gets a realistic delivery promise, avoiding any delays or overpromising, and the Sweet Treats manage stocks badly. Once the availability is confirmed, the SAP triggers the warehouse for the creation of the delivery. So the delivery is created in SAP using the transaction VL01N. Once the delivery document is created, the SAP tells the warehouse to begin the delivery preparations. The warehouse staff picks the 100 chocolate boxes from the stock, and the chocolates are securely packed for the transport, and the boxes are labeled with delivery and the customer information, and these packed goods are moved to the shipping area, and finally everything is set for goods issue and the dispatch. In short, once the delivery is created, SAP says it's time to deliver. The warehouse picks, packs, and prepares the chocolates for the dispatch. The next step after the delivery creation comes the post goods issue. This is nothing but the process of updating the inventory and the financial records to reflect that the goods have physically left the warehouse for the delivery to the customer. Now let's see what happens at the goods issue. Once the chocolates are packed and loaded into the transport and which is ready to go, the SAP gets updated stating that the chocolates have left the warehouse. Now the ownership will be changed for those 100 chocolate boxes. Now the goods are legally belong to TastyMart, which is the customer. Now the inventory is reduced in SAP. 100 boxes are removed from the stock of Sweet Treats Limited. SAP costs the SAP posts the financial entries and the delivery document is marked as goods issued. And the system now allows the billing process for the delivery document. In simple terms, PGI means the chocolates are on the way, the stock is gone, and the billing can be sent to the customer. And the next step comes the billing and the payment collection. So this is nothing but the process of generating an invoice for the delivered goods, which involves the updating the accounting and the customer records for payment. After the chocolates are shipped, that is the post goods issue is done, SAP generates an invoice using the transaction VF01. So the invoice document includes the product details about the product quantity, price, taxes, and the delivery information. And this invoice is emailed or printed and sent to the TastyMart, which is the customer. And the SAP updates the accounts receivable. That is how much money the customer has to pay to the SweetTreats Ltd. The SAP tracks the due date and the payment terms in the SAP system. And now the system waits for the incoming payment from the customer. In simple terms, SAP says, here is your bill for the chocolate boxes. So when the customer pays the invoice, the payment is received via bank, check, or any online transfer. SAP Finance module posts the payment against the invoice. The customer account is cleared and no more open balance. The financial reports and receivables are updated. The payment status shows as complete. And the sales cycle is officially closed. In simple terms, once the customer pays the due amount for the 100 chocolate boxes, it marks the chocolate deal is done. So to summarize, like how the chocolate sales process of Sweet Treats Limited works, this is just a summary of it, which includes various phases of sales. So the first phase begins with the pre-sales processes, which includes the inquiry and the quotation. As part of inquiry, the TastyMart asks if 100 chocolates boxes are available, and the inquiry document can be created using the transaction VA11 in SAP. And also a quotation document can be created. So this is a official offer sent by the Sweet Treats Limited to the customer, that is the TastyMart. The Sweet Treats sends the prices and offer details, and this quotation document can be created in SAP using the transaction VA21. And once the customer confirms this quotation and agrees for the sales, a sales order can be created using the transaction VA01 in SAP. So once the sales order is created, the availability check is carried out, and if all the required quantities of chocolate boxes are available and can be delivered to the customer in a stipulated time interval, a delivery document will be created with respect to the sales order, and the delivery creation can be done using the transaction VL01N. This delivery document triggers a notification to the warehouse who performs the picking and packing of these chocolate boxes, and will prepare for the delivery. And once the goods issue is done for that particular delivery document, the chocolate boxes will now officially leave the warehouse and will reach the customer location. An optional document called shipment document can be created with respect to the transaction VT01N, which will arrange the transport or the logistics. And once the goods issue is completed for the delivery document, an invoice document can be created. So this invoice document will be sent to the TastyMart for the 100 chocolate boxes. It includes all the price details, the price amount that has to be paid by the Tasty Treat to the Sweet Treats Limited. So once the customer sees the invoice and pays the due amount, the end-to-end cycle of the sales process will be completed. and all the accounts receivable and all the finance related documents will be managed by the finance and the controlling module. So this is the end-to-end summary of how the sales process can be managed in an SAP. So in short, the SAP SD works like a brain behind the scenes, making sure the product sales run smoothly, billing is accurate, and the deliveries are done efficiently. So if you find this content valuable, please consider liking, sharing, and subscribing to our SAP Tutorials YouTube channel. And we appreciate your support and look forward to providing with more SAP related insights. See you in the next video.